crypto asset? Bitcoin's the best crypto asset. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best? 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 What's the second best?
Welcome to Discover Crypto. Today is the day. Federal Reserve FOMC meeting is about to go live in 1 hour. And we're going to be covering some of the biggest catalysts for Bitcoin and the markets at large as they're facing a new Federal Reserve chair. This is a very exciting day for me. I just ate an entire pizza nearly. TJ didn't want any. So that's on you.
Yeah,
that's
is on me.
you.
I didn't eat. I already ate today. He came in and I already had my protein for the day.
I came into your office like Kramer with a pizza in my hand. It's okay. But I also was surprised by a major Bitcoin mining corporation pulled off a pretty surprising move in this bear market. And crypto is seeming to start to take the center stage in terms of politics once again. And the old ideas of why I got into crypto can really be driven home from this story out of Illinois. Did you see Illinois?
I have not seen it.
We're going to cover it today. It's a good reminder of why privacy matters, why crypto in general. But make sure to follow us on the YouTube, on X, all over the place here at Discover Crypto on YouTube. You can also go and post your own ideas about the crypto market here if you go to post. And you cannot post or yell at me if you're not subscribed to the channel, which is a positive for me and a negative for you. If you're watching from the sidelines, not wanting to subscribe, but also wanting to get your point across, make sure to subscribe to the channel. Now let's check out the markets before we get into too much Federal Reserve news. We have Bitcoin following a path that I'm very happy it did. I was in a short last night, and I was shorting this from 66,600 bucks about, and I put the signal into Discord a while back. And now we are now looking at a potential bounce. I was looking for a bump and run. And what's played out is a nice little bump and run. And I was looking to retest near the center point of this W pattern. Come back down to do so.
Which was what, 64 and change?
Yep, it was 64 and change. And this morning we popped down to about 64.5, which honestly is close enough. If you're looking at the velocity of how Bitcoin gathered its footing, once it did hit that liquidity pocket, and really the top end of this little local high here definitely marked a strong volume node, right? So when we were looking at the pump, I didn't want to get too ahead of myself. There's still a lot of work to do, and I'm going to be actually showing a lot of the underlying metrics that are basically following to a T what they did last bear market. Remember, I was, we leaned against the grain. We bought a bunch of altcoins when it was unpopular.
Yeah.
It was.
Yeah, you buy a bunch of, you do really well accumulating altcoins at the bottom, and people are like, "You're crazy," and then you make $1 million, and they're like, "You didn't tell us." Yeah,
we're gonna actually come up with a bunch of receipts about that as well. I'm sick of this. We're gonna have to come up with a bunch of receipts. So let's get in the FOMC signals. 3 Fed signals that could make Bitcoin pop. Now it's going to be going live at 2 p.m., about 2:30 p.m. Eastern Standard Time today. But there are some key things going on within this. So today's main event, the Fed chair, Kevin Warsh, new guy. There's an Estee Lauder kind of industry that his wife is from. So he's very plugged into money. His wife's worth a lot of money. They're billionaires, right? This is his first interest rate decision. No change in interest rates is expected, which means the markets will be scanning the policy statements, what his tone is. Is he dovish? Is he bearish? Economic projections and the post-meeting press conference for Qs. You're going to be watching is he going to have to wear the purple tie? Is that?
No, I'm sure that's kind of the thing. I think it's going to be interesting. Everybody's going to be reading all the nuanced stuff. I think largely nobody's expecting any change. There's going to be no change. So they're going to read his tone. The things to watch out for is what he says about the data, the dot plot stuff coming in and how that's going to impact liquidity in the future. That's what I'd be keeping an eye on. And a lot, but the problem is nobody has any baseline or context for, like, with Powell, you had a lot of time to know, like, oh, when his tone is this, that's pretty hawkish or pretty dovish. Where this is going to be pretty new. I don't anticipate too many fireworks coming out of this, but it's definitely a good, it's going to be fun to watch. As a first, it's crazy that we love watching these things now, but it's almost like, watching the new starting quarterback for your favorite team take the field. I've watched him in spring training. I've seen him in practice. I know his film. I know, like, generally
it's like the Manning brother. I hope the Manning brother did well, you know, because he was following Peyton, right? Eli.
Archie Manning.
Yeah, so hopefully he does good. There is the dot plot is part of the first portion of these catalysts. What's up, Crypto Crow? I see you in the chat. Good to see you. The dot plot, geographical representation of where individual Federal Reserve members or governors, Federal Reserve governors, it's a group of Federal Reserve members that see these interest rates and where they're likely to go this year. Fed funds futures currently price in an 80% chance of a 25 base point increase by December. That's a large likelihood of what currently the poly market is showing this, where we expect a little bit of pain in terms of interest rates this year. It's a reference point for reading the plot. But if it shows fewer than 80% of the members projecting a hike by December, Bitcoin price could absolutely react positively.
Yeah, that's the big thing people are going to be watching for. Now, obviously, he was brought in, and everybody knows Trump wants rate cuts. You know, he wants rates to come down. You know, Warsh, traditionally somewhat hawkish. You would think, like, if he stuck to his prior, kind of economic talks and thoughts on markets and the way things that hike actually physically responsible probably makes sense.
Yeah.
I think he's going to ride on the unknowns, the rise and fall of oil and some of that uncertainty that's impacting inflation. And like I said, likely not do anything. But the big key is it's a lot of people were predicting rate cuts this year. I was in that camp. I thought the back half of this year we would see some cuts. Now, at least the probabilities are saying the opposite of that. So this is what needs to be watched. I do think some of the inflation numbers will come down if we can keep peace and keep the Strait of Hormuz moving and all that sort of stuff, oil prices, but that seems to be harder to do these days.
It's kind of, it's up to iCountry.
Yeah.
I've came up with a new word. It's up to iCountry to decide that.
Good.
But
good.
Think about that, what we just talked about. So we have a lot of bad news kind of baked into our mindsets and into markets mindsets anyways, but we still have money supply increasing. We still have massive amounts of investments going into the stock market, obviously. And Bitcoin is still defending itself in a bear market at previous all-time high ranges, right? So it's really not all that bad when you boil down the situation that we're currently in. We are going to be watching Warsh's take on the rates and inflation. Will Trump nominee break from market expectations and strike a dovish tone? That'd be exciting. Or citing recent oil prices or the AI disinflation to lay the groundwork for these rate cuts. Warsh is also pretty new into this position. You don't want to shake up the Trump cabinet too soon, especially, he's not directly connected under Trump, but he is at the behest of the media and the public sentiment towards what his decisions are going to be made. And Trump obviously wants lower interest rates. He wants cheap money. He wants to grow our way out of this, right? So the AI-driven disinflation is an interesting concept. This could be a whole video in and of itself to lay the groundwork for rate cuts that the administration wants, or will he fall in line with the current market pricing? Now, the third thing, and just one more post on, but I want to go to Polymarket. Polymarket's been a pretty good measure for this, but Warsh has previously criticized the Fed's approach of over-communicating with the markets. Sometimes I miss the under-communication of Joe Biden. I'm not going to lie.
Yeah.
I didn't know if Joe was still there or not.
Yeah.
And it was just business as usual.
Quiet sometimes is good when it comes to markets. Yeah.
Well, and especially trading.
Yeah.
Especially trading, right? Now, he's likely to be questioned on this during the press conference. And if he signals a shift towards significantly reducing the rates forward guidance, he could absolutely move the markets. For now, the implied volatility index tied to Bitcoin and ETH are hovering at 2-week lows, having reversed the early month spike. So we're going to take a look at Polymarket. I got to take a look at Bitcoin's general chart here. A lot of things are happening in terms of money flow that I wanted to see come to fruition. And, a lot of people have checked out of crypto. A lot of people have decided to look elsewhere. And these are the times where I am going to work 10 times harder for everything. I don't know if it's possible. My wife's given me the go ahead to just become overly obsessive. I'm already obsessive as it is, but this is the season where I just hammer to really drive the message home that we're in a good buy opportunity.
Yeah, we've been talking about that even before the show. Now's the time. We're even going to get really focused on how we do the content. I was just saying that in the chat. If you guys have any feedback for us on things you think we could have done better over the years, I've really been reading the comments and listening to the community on this. And, obviously, everything we do is to bring value to you guys, but I think there's been too much volume, and we're going to get a lot more focused on value over volume here going forward. I'm going to be getting a lot more involved with the content again because I want to get my hands on it and make sure, like, I think everything we've been putting out is good stuff, but I just don't think it's been organized in a way that's helped people as much as it could have.
Yeah.
So we're working on a lot of that kind of stuff. We're working overtime right now because exactly what Drew just said. Now is the time. If you're engaged right now and you're following along and you're following an organized path in a real investing system and not just buying coins and guessing and hoping, you're going to make a lot of money over the next handful of years.
Absolutely.
Now is the time to be engaged. So,
well, and it's not about, I think I've done a really bad job. I've made jokes about this, but taking profits instead of screenshots, right? That's kind of the simplest metric that I can say for people that are watching. They're just fly by the night. The moment you take a screenshot of your profits in a portfolio and then let's up that, then you go run to your wife and show her the profits in there. You better be selling. You absolutely better be selling, because that market reverses, you will not hear the end of it. Now, let's take a look at Polymarket. We have rate cuts expectations for 2026. How many Fed rate cuts are we expecting? Polymarket is pricing in a very high likelihood of basically zero. Look at this. So they're actually saying that we're going to stay flat all year on Polymarket. I kind of feel like betting against this a little bit. Like, no change to interest rates. That's the fiscally responsible thing to do is be to raise, but I think we're kind of going to be irresponsible.
Well, no, I mean, actually, that wouldn't surprise me at all. I mean, that is where my consensus is too, is flat. And it's basically, I mean, he can come in and ride the same line that Powell did. I'm waiting to get the data. I'm waiting to get the data. I'm waiting to get the data. And we can start to see what happens in some of these things. Obviously, Trump's going to be making a ton of noise for cuts. Trump wants a cut. I think he's going to, if inflation doesn't subside a little bit, I think it's going to be a tough sale on cuts. So the safest play, which oftentimes is what these guys are doing, is, this is all career positioning for them more than anything. They don't really care about retail in America. The safest thing for him is to not change much, keep it status quo, wait for more data to come in, and then when it's a very clear, easy cut, which again could happen towards the end of this year, but I don't think we'll see much movement from him.
I gotta change it because I forgot we only have like 6 months left.
Yeah,
so that's gonna fly by.
It's gonna fly.
That's easy for them to sit there and be like, we need another quarter of data. They only need to act like that twice.
Right. I was gonna say, how many more meetings are there?
We can go to the CME tool to see.
I think it's.
No, it's up here. Like, obviously, we have 46 minutes, but
probably like 4 or I think it's around 4. But yeah, 4 more.
Well, I mean, the calm waters would be pretty good waters for us. That means we can just kind of be business as usual in terms of crypto, bear market, and Bitcoin. Now, I have this up on the side screen here. I am going to be watching for, I keep wanting to say Jerome Powell. It's Kevin.
Yeah, Kevin Warsh.
Yeah, Mr. Kevin. So we're going to be watching for Kevin Warsh going live here.
Reminds me of Ross from Friends. He just gives that energy, like very like middle of the road, I guess is the best way to say it.
He is. Like, if he was at a coffee shop, I wouldn't know it's him.
Yeah, I should have pulled the picture up before I said that. Give me a second.
Yeah, you should, because if I was behind the guy at a coffee shop or a gas station, he'd just be another guy, maybe a more polished person for the demographic that I live in, because I drive a long way to get here. I almost live in Alabama. So, we have a kind of a different demographic out there, but
here, hold on.
Let me see what he looks like.
Here we go. It's this one that gets me. Move yours. Add
yeah,
mine.
let me see this.
This one right here. Is very like Friends.
Kind of like a goober, someone that's, but that looks like someone that's malleable. I doubt that he's as malleable as he looks. He's probably got a super stern, like, serious foundation.
And we'll find out today.
Yeah, I know. I'm excited to see him. Now let's read in some more stories before he does in fact go live. So there's some interesting data. If you forget about the price charts, how Bitcoin and the S&P 500 look when you adjust them for the money printer is quite an interesting concept. So real quick, if you're only looking at dollar price of your portfolio, you may be missing part of the picture, which is significantly shaped by money supply growth. Casual observers, the markets look like business as usual, while Bitcoin nearly halved to 66K since that 126 peak in October. The decline could be dismissed as just another brutal quadrennial crypto bear market. Meanwhile, the S&P 500 continues to kind of hover near all-time highs. Beneath the surface, a more interesting signal emerges when both prices adjusted for U.S. M2 money supply. The M2 is the Federal Reserve's estimate of liquid assets, including that cash on hand, money deposited into checking and savings accounts, and short-term saving vehicles such as money market funds and certificate deposits. Now, the M2 to Bitcoin chart is kind of the fear porn out of this article. This is observers see Bitcoin as a high beta barometer for dollar liquidity. As the Bitcoin to M2 ratio, Bitcoin price adjusted for money supply growth is now flashing a warning. The ratio, after a sharp climb in 2023 through 25, appears to have formed what technical analysts call a head and shoulders pattern, typically read as a very bearish signal. Now, the Bitcoin to M2 money supply is quite an interesting graph. If you look at what happened this is actually something that was part of why I G-did a lot of altcoins in early 2024, seeing that the Bitcoin to M2 was beyond the all-time high, way ahead of schedule. Like if we look at the Bitcoin price chart, sure, we hit $75,000, but if you adjust it for inflation, like I'll just go show you. If you adjust this for inflation, we didn't skyrocket too far above and beyond. Which one is it? Let's get these out of the way. So on the weekly, I remember when we went to 75K, I sang a song, a Creed song, and I crashed the entire market myself.
Yeah, I remember.
I was asking for it to take me higher.
Yeah.
And part of the song was 100K ain't shit for me.
Yeah.
Well, I found out the hard way that 49K was in my near future, right? But the interesting thing about the Bitcoin chart, when I look back at this metric, is the M2 money supply is pretty well in tandem with the actual price of Bitcoin, slightly more aggressive. But taking into account how much this looks like a head and shoulders pattern on the M2 money supply for Bitcoin, I mean, if you're trying to draw this entire section as a head and shoulder, that draws a pretty bearish future for Bitcoin, where you have the left shoulder, the head, the right shoulder here. This would imply that you're looking at a downtrend, or not really a downtrend, but basically a cataclysm of Bitcoin down into, $10,000. I don't think that that's going to happen. I don't think that that's going to happen, and I'm not investing like that's going to happen. Instead, I think that the M2 money supply has just found this new darling, which is AI, semiconductors, and the realization that this is not just a crypto renaissance that we're a part of. This is also, generally speaking, a technological tea party where you have AI, you have semiconductors, you have cryptocurrency, you have AI agents now that are only able to transact in cryptocurrency, all overlapping together, which is another reason why we need to focus in a lot more, because there's so much going on with this. But I don't think that this M2 money supply chart is going to break down. I am a huge fan of head and shoulders pattern, but I will say that what I'm seeing in terms of Bitcoin on its price action is exactly what I figured was going to be after the ETFs went live. What I said when the ETFs went live is now, instead of a 77% drop turning into a 70% drop on Bitcoin, I was expecting a 50% drawdown. Exactly where we are. We're at previous all-time highs. It might be just as simple as that. It very well might be just as simple as that. And the money flow, the signal for my altcoin hammering, because I'm buying Bitcoin this entire range, but the signal for altcoin hammering is actually, I don't know if you're going to like this because of how quick it might come up, TJ, but we might be needing to get kind of aggressive on altcoins in July and August.
Yeah.
A lot sooner than I
agree. I mean, even seeing we haven't covered, I don't know if do you have some of the Coinbase stuff? Is that part of your rundown already? Or
I have the AI agents, but you should pull up the newest.
Yeah, go ahead. I'm going to pull up this announcement. You can go ahead and pull up Arrow and Morpho and some of that stuff, because that community said, hey, have you guys looked at Arrow? And
Arrow has been absolutely crushing it, actually.
I told everybody, I don't know where it's at now, but I've been saying since before I started getting into it, if you get a chance to accumulate under 40 cents on Arrow, it's a deal. And my big thesis behind why I think AI and DeFi outside of Bitcoin, I'm always you want to have most of your portfolio or a big chunk of your portfolio, the more money you get, the more of it you want to be in Bitcoin.
Yeah.
We'll just say that.
Yeah.
The richest people are going to have a majority of it in Bitcoin. If you're still trying to make the jump across the cavern, you can take a little bit more risk. But so putting Bitcoin and, Ethereum aside, I've kind of got Bitcoin and then Ethereum and Solana in their own kind of buckets. Other than that, if I'm getting into lower altcoins, it's going to be DeFi or AI. Both of those niches are where I think the future of crypto has been going. I've been talking about that for a long time. And what you start to see is it's starting to play out right now. And part of the reason you and I got on base early back in last bear market back in 2022 was because Coinbase was going to be behind it.
Right.
They just came out, and this isn't even all of their stuff. They just announced tokenized stocks, thematic indices, prediction markets, combo and prediction markets, pre-IPOs, AI powered investment advisor. But I wish maybe that wasn't. Oops.
I mean, Brian Armstrong's been talking a lot. Something that kind of scares me, though, is seeing Ansem talking a lot. And, well, Brian Armstrong is always kind of talking a lot. So he's not. Do you think we should be scared if Brian starts like tweeting every day, like Giga Bullish
No, just
again?
only CZ. If CZ starts talking a lot, that's when you need to be concerned. Every time CZ starts talking like crazy, the market the bottom falls out of it. But they have even more announcements. I thought I had a better post, but where they're going to be doing lending and borrowing and all these things, it's going to be handled through the DeFi backend. So that is Arrow and Morpho.
Yeah.
Coinbase is going to be selling it to their retail customers, but they're going to be using Arrow and Morpho to do a lot of this stuff.
Well, and think of the user interface. They win as far as that goes. It's like a Phantom type approach. Like Phantom is super easy to use. That's why it blew up the way it did.
Well, they've got the customer base. They are the face, Binance and Coinbase are basically the Amazon and Facebook of crypto. And so they're going to continue to hoover up products and offer products to their clients. And then you just buy the infrastructure that they're going to use, which again, they're very incentivized to use the base ecosystem. The best products on there right now are Morpho for lending and borrowing and Arrow for decentralized transactions, so.
Yeah, Morpho's doing pretty good.
Yeah, I mean, I don't know. Pull it up on the chart. People are talking about it.
Let's go look at Arrow and let's go look at Morpho.
Because I think they're riding. If you want to know why Arrow and Morpho are pumping, it's because of these Coinbase announcements. Because smart, sophisticated investors are like, all right, boom, that's the signal. Let it go.
Look at this Aerodrome chart here. This is absolutely crazy. So this is the money flow on Aerodrome. This is the big downturn where we hit 30 cents flat. We had a secondary downturn right here where we hit 30 cents flat, but this thing is absolutely ripping off of that exciting buy zone. And like this green box, I have made this so big because I have not seen anything come out to replace Aerodrome. I have not seen anything systemically come out that Coinbase would use to replace Aerodrome for its DEX undertowing. So when I see this 30, honestly, like all the way up to basically 50 cents is fine, as long as we're buying and hammering in the lower end of this. But Aerodrome might turn into something absolutely disgusting. I mean, this is something that it's made me a lot of money last bull market. I didn't see anything come out to replace it. And its money flow is actually already printing a green dot on the weekly time frame.
I mean, same for me. We're creating a whole investing operating system for our community that's going to help them really assess things better. And when I go through it myself, you could argue that I am irresponsibly allocated to Arrow. As far as percentages go and all that sort of stuff, like the Arrow has been and will continue to be the biggest DeFi play in my portfolio. Like, got a lot of Aave. Like I said, putting Bitcoin, Ethereum, Chainlink, and Solana aside, Arrow is. I got almost as much Arrow as I do Solana or Ethereum.
This is a good point too that I want to make on top of what Crypto Stevo is saying in the chat. So he says he hates to admit it, but Uniswap is easier to use for a retard like him than Aerodrome.
It's true.
And that is why I brought up the Coinbase ability to make the user interface insanely.
Yeah, that's the right part of the thesis. So the user isn't going to be using Arrow and Morpho. And that's going to be true for a lot of the best crypto products. We're getting out of the phase, the user is going to use Robinhood, they're going to use SoFi, they're going to use Coinbase, they're going to use these things that are made for retail. But identifying, what is hype, are they going to use hype? What is Robinhood going to use as their back end? What are these other companies going to use to clear their order books and be automated market makers and to get all the efficiencies that come with crypto? And again, Aave comes up over and over and over and over. You look at the guts of crypto lending and borrowing, and they're going to be offering mortgages and HELOCs and all these sort of things. Oftentimes, that's going to run through Aave or Morpho. Now, will there be competing products? Sure, there'll be other stuff that gets created, but that's how you look at the guts of it. And that's a really good point.
The tools that we use to find these DeFi before they are where they are now are something that we also have to have in what we're building. Understanding the tools and how we located these types of products is super important. Like, there's a lot of tools that you can use to front run what's coming in crypto. The Aerodrome is pumping back up, and now you're going to have some turbulence. You just want me to shoot straight. You got a 50-cent mark that has been a previous zone of support, right on 1, 2, 3, 4, 5, 6 times. Right around, like, if you count the October 10th, not so much. Maybe even 7 times. You're going to have some turbulence here, but in general, the buoyancy of Aerodrome, the setup of higher lows, it's looking good, and it's still relatively cheap to where, like, I remember selling this thing for $2. Very happy. I bought this thing, a lot of it at 18 cents. So it felt good. But the other one that we're talking about, Morpho, it's a little bit more overextended in terms of money flow and TA terms. So the ship hasn't left yet for crypto. We're still bouncing back and forth in the 60K range for Bitcoin. And by all means, we could go do a liquidity sweep on Bitcoin in the low 60s, maybe even high 50s again. And you would see, a lot of these good alts reset back down to these previous supports. But my general expectation for Morpho is it's probably going to be able to hold up from $1.30 to $1.50.
Well, and depending on how much you zoom in, that right there looks like an inverse head and shoulders, right?
I guess.
Like if you just start right where your cursor is.
Yeah.
I mean, I don't know. I'm not a pattern person.
Ish. This is almost too choppy
to be a
like,
shoulder.
Yeah, it's almost too choppy. More so if I'm looking at this is a W pattern.
Well, yeah.
And this is a product that came out in March of 2025 in terms of being on Coinbase. And it was really kind of born in a bad time. It was born in a bad time because we were on our way to that last blow off top for Bitcoin.
They launched at the peak of alt season. Yeah. But it's held up extremely well.
Yeah, absolutely. So
I love it.
It really like this, the money flow probably got to come back down. The momentum's probably got to at least come back down close to equilibrium. But generally, I've done this on other charts where I'm covering my shows, but I'm a happy guy if I'm snagging this thing between $1.60 to $1.30. That's fine. And even slight DCA, if let's say the Bitcoin chart keeps playing out the way that it has been, and we get that crab motion completed over the next few months, I might very well end up buying Morpho at $2 or, $2.50. I might have to buy the top of this current structure because the lending is going ballistic. It's caught billions of dollars out of the crypto lending kind of ecosystem since that debacle with Aave happened. So yeah, I like Morpho a lot.
Created a great buying opportunity on Aave, and they resolved all that very well. And
yes, did you pick up some?
Oh yeah. I've been accumulating a lot of these, and even I saw somebody mention Figure, which is I think their ticker's FIGR on the stock market. The mortgage and long-term debt type, credit offering within crypto is in a lot of ways outside of Bitcoin store of value and stable coins. I've obviously found really good product market fit, but lending and borrowing is the next most obvious piece. That's why I like Morpho. That's why I like Aave, which is the kind of the decentralized play on that. But, again, seeing Coinbase offering mortgages and Figure HELOC, I think, where is their thing at? I'm not looking at the top 10, but it's right up there. Where is it? I saw it on CoinMarket. Their stable coin is right up there in market cap, and their stock is crushed, but they're out there buying mortgages like crazy.
I haven't looked at the coin stock price in a long time.
Yeah, it'd be a good one to look at too.
Yeah.
So, we can maybe do that later in the show because I'd be curious if they had a reaction on any of their announcements.
See, this is where I start to get feverishly greedy. in buying, and it's backwards mentality. I understand. I may look like a crazy person now, but I guarantee you, this is going to flush out. The world's going to continue. It's not the end of the world. And this is all coming from what many people call an extreme prepper.
Yeah.
Right. Like, I think everything's going to be fine. Maybe Boo Boo does some more bad news in the Middle East, but I think the market's kind of understand. But long-term holders of Bitcoin, the K33 said record supply metric shows the bear market may be nearing an end. You have Bitcoin obviously rebounded a little bit this week. Couple weeks of gains were kind of wiped out very quickly, and now we're hovering around the mid-60s region. K33 latest market report, head of research Vettel Lunde, said the defining feature of 2024 to 25 cycle was a large volume of older coins being reactivated and sold as prices reached record highs, whereas 2026 has exceptionally low reactivation of coins aged 2 years or more, with only 218,000 Bitcoin reactivated by June 6th, indicative of a much weaker on-chain selling pressure that's going on right now, which is a very, very good sign. I think long-term holders are realizing that the sun will rise again, Bitcoin will rise again. They're holding the line. The decline in old coin activity is suggesting long-term holders are less motivated to sell, and patient participants are steadily absorbing the supply. I saw a couple people in chat picked up, there's one fella picked up a quarter of a Bitcoin just in the last week, taking advantage of the dip down to 60K. That's how you win. You don't win by top blasting. You really don't. You win by being patient, convicted, and over time, you will absolutely find that. So this is a very good metric to see these old coins staying still, kind of a steadying of the water. But this is the really surprising in terms of the minor capitulation worries that we've been, because there's been some miners that have been selling.
Yeah, no, that again is another classic bottom signal. Like, I'm still very much in the camp that 59K was the bottom. It's looking stronger and stronger. I know that's kind of contrarian to the common consensus out there. A lot of people calling for much lower numbers, but from what I see, and I was even talking with Frank about this yesterday, even he is saying, like, if that wasn't the bottom, it's got to be.
Even Frankie is feeling it.
Like, that's very, 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 very close. So
okay,
again, I'll take more pride in calling the bottom than calling the top.
Yeah,
maybe that's easier. I don't know, but
I'll tell you what's easier. Perpetual pessimists always sound smarter, but optimists actually build the future.
Yeah, actually are smarter.
Right. So there's the difference there.
It's true. So I think this is the bottom. I've been anything under previous cycle all-time high. Like, maybe it sounds too simple, but for me, that served me well over the years. When Bitcoin was at or near 20K back in 2022, we were buying it. When it was down in the threes back in 2019, I was buying it. Now, again, it's at 60 in 2026, 65, below 69. That's a good time to buy.
Right.
And it's a good time to accumulate strong altcoins, whether that's Arrow, whether that's Morph, whatever your favorite one is, Solana, Arrow, Morpho. Like, if you think it's got strong use and a strong case to come back, those are the times to accumulate those.
Absolutely. And I've seen, I've even revenge traded the hell out of ICP last cycle, and I made a lot of money doing it. ICP didn't take over the internet, but it did fall to extreme lows. And then the hype and the water started to rise once again in crypto, and that thing absolutely went ballistic, right? I had no attachment to it long term.
When I see this, and it's safer to be a pessimist, and I actually strongly disagree with that. That is the lie that is in the pessimist's head of, like, I'm keeping myself safe, I'm reducing my risk.
That's a good point.
But the biggest risk that's coming right now, and we've been talking about this a lot, is the next crash. I think that's what your video is about.
It is.
Yeah. So I'm gonna take away your, but the next crash is a crash up. So the biggest risk is actually not being allocated to anything of value, anything of underlying value, whether it's a commodity or an equity, something. That's the biggest risk in the market right now. A lot of people, especially retail, feels like I'm playing it safe, and they're gonna, and they're watching the lifeboat sail away. It's like you're standing on.
They're standing on the sideline, and be like, it might sink.
You're standing on. Yeah, you're standing on a desert island, saying, like, I don't think I want to get on that cruise ship because I heard this story about these people that got stuck, and so you watch the cruise ship sail away, and then you're just standing there with you and your 20 buddies, and it's not going to get very safe. It's not going to be very safe for very long. You know, it may feel safe in the moment, but the further away you get from that decision, the riskier it's going to feel. And I'm seeing this, I'm witnessing this happen, and I've seen it happen over the last, especially over the last 5 years, ever since 2020. And I don't see it. The game has changed after all that. Like they're not going to let the market crash like they have in the past, because what does that do? That gives the little guy another chance to get in.
True.
That in 2008 crash, a lot of people that were smart and were prepared got a new seat at the table.
A lot of people are waiting for the housing market to collapse too.
That ain't gonna happen.
Right. Like they're expecting $50 trillion to walk out the door of American economy.
Not gonna. And people that think that also haven't really studied real estate over the years. Like the biggest corrections ever are in the like 20% range. And it's happened a couple times. They've always been made up within a couple of years, 2 to 5 years after that. And we've been experiencing like that every year. 20% gains for the last 5 years. So
it's a lot to take in what we're saying, but I use crypto to buy my house, and it changed my life, leaning against the curve. And that's why a lot of people see what the AI sector is doing and what the semiconductor industry is doing, and they're like, Bitcoin's left behind forever. They're gonna retrofit and change all of these Bitcoin miners into AI outfits, and that will happen to a degree because the money is green. But apparently one of the biggest miners in the United States feels that the opportunity for Bitcoin is green. So Bitcoin mining firm Mara has just bought 1,000 Bitcoin worth $66.7 million. They did that on purpose, 6-7. I see this everywhere. I can't get away from this.
You got to love the culture in Bitcoin, right? That's Marathon, right? They've been around for a long time. You got to love that they have fun with everything they do, whether it's Elon Musk, I bought Bitcoin at 69,420 just for the culture. I bought a whole Bitcoin right there at that price just for the hell of it.
Well, this metric, seeing a company this size that obviously has the opportunity to retrofit and to change into just AI computing, I bet you that option is on the table and it's been presented, feels that the opportunity, at least a big part of it, is buying a giant bag of Bitcoin at these current price levels. So seems like a pretty damn smart move to me. And what I'm seeing is a lot of people get distracted and go away from crypto at the absolute worst time to do so. So, if you are locked in, I think as long as we're staying effective, we concentrate our efforts, like you were talking about at the beginning of the show, not overload on content, but over deliver on value and concentrated value. This is the season to do it in. This is the season to win. A little bit more on Coinbase as well. They're going to be rolling out this AI agent infrastructure that you can use on Coinbase. And this makes the start of a new era in terms of what they are looking at doing, agentic finance. Now, this is kind of, $50 word, kind of hyperbole to people that aren't too involved with AI agents. They're not too involved with the mindset of what crypto is actually going to do in tandem with AI agents. But I will tell you that some of the smartest people that I've had a chance to have a show with, even this is yesterday, it was this crew that rolls with, some of the bigger names in crypto. This is all they wanted to talk about, is how agentic agents are going to transact with crypto.
Yeah, but this has been my whole thing. This is deep in the DeFi world, deep in agentic programming. That's where I've been for the last few months, is really actually doing custom harness. We call it like harness as a service, where it's basically building custom agent harnesses for people so you can run a well-organized agent team of, 8, 10, hundreds or thousands or however many you want. But
there's going to be 10 billion of these things in a short amount of time.
There will be way more crypto transactions happening by agents than by humans, way more. And this kind of comes back to the same concept we were talking about with Coinbase being the retail facing layer. Like if you get into the guts of this stuff and it's like, oh man, the everyday average person isn't going to be using AI agents. Well, they are. They're just going to be doing it through Coinbase. They're going to be doing it through Grok. They're going to be doing it through ChatGPT. And they're not even really going to understand the back end that's happening. And this is the value of getting in and understanding this stuff with your own hands, because then you can see the tools that are needed and you can understand, go research X402 payments and what Coinbase is doing and where that happens on Base and how that's going to, again, impact Morpho, impact Aerodrome, impact all of these other DeFi protocols that make perfect sense to AI. Stable coins specifically, they're going to be using stable coins like crazy. and people won't be. It's going to change the way people interact with the internet. Whether they realize it or not. Like, and it's just like crypto. I will say this: like, I'm going to some of these things, and it feels the exact same as like crypto in 20.
The hype is there.
Well, it's the we're the same crowd, and you were just as early as crypto in 2016. And the one thing I learned, or one thing I have learned over the years, is we are not wrong. All of this stuff is going to happen, but it's probably not going to be as fast as we think it is. So like in 2017, I thought like all this stuff with DeFi and everything was going to happen by 2020. And by 2020, we like barely got, the ETH merge and, some of these things. We finally have some stable coins that don't cost too much. And we're just starting to get the infrastructure where it's usable. Now in 2026, some of that stuff's starting to come to fruition. And I think it's going to be very similar with agents.
It's painful to be right too early.
Yeah.
It's
just a long time.
It's a long time, right? But if you're able to navigate to and from in the kind of, because I think the 4-year cycle outside of, the price metrics and gains expectations, the 4-year cycle from a time frame perspective, from low to high, is still right on. We just hit new all-time highs too early. I don't complain when I get my food too early at the restaurant.
There you go.
I mean, we hit new all-time highs too early. Now, let's go through these other news articles here real quick before I have the Federal Reserve website up on the side, so I'm watching it. But the Senate House is trying to reach an agreement. It looks like they've reached an agreement on housing bill banning CBDCs through 2030. I don't think this matters. I really don't think that if they're going to label it CBDC or USDC changes anything.
No, this is all political games for themselves.
This is political games.
Yeah.
Right. And they're going to get the rah to people like, oh, they want our freedom. They want our decentralization. But in the back end, you have yahoos like Pritzker. Governor Pritzker in Illinois just signed a 0.2% tax on crypto transactions into law, including transfers between personal wallets. That's fun. So sending to and from your own personal wallet is going to be taxed. So if you're moving money from the left pocket to the right pocket, Illinois is looking to tax you for doing that.
Wow.
That's fantastic news, right? This is so much why I got into crypto, especially. Well, I didn't get into crypto for the money. I got into it for the control. I got into it so that the government couldn't steal my money out of my bank account, because I was very outspoken about jab season, right? And there's a lot of reasons, a lot of things that happened at that time that led me to believe that I needed to get out of the current monetary system and take control, take some sovereignty over my own value. And now we see things like this from the Illinois Governor Pritzker. If you are in Illinois, I highly suggest that you use lawful methods of reaching out to your local representatives and letting them know if you disagree or agree with this movement. The Crypto Council of Innovation calling it the most punitive digital asset tax in history. He probably just needs more money for appetizers, to be honest with you. Michael Saylor coming out here, big mistake. And now this is Invest Answers, and now the crypto bros will free Illinois. I doubt that. Yeah, Illinois has got a lot of work to do when it comes to cultural.
He says flee Illinois.
Oh, flee. That's more like it. That's more like it. I thought he said free. This is my favorite one though. This is Jameson Lopp. You know Jameson Lopp,
of course, right? Yeah.
This I highly recommend. If you're a hardcore Bitcoiner, Jameson Lopp is one of the best follows out there.
Mm-hmm.
One of the oldest names in kind of the Bitcoin dev realm.
Yeah. Well, I mean, he's a security expert. If you care about privacy, security, self-sovereignty, you should definitely check out Casa Hodl. They've got, that's his company. I think it was used to just be called, maybe it is just called Casa. I think maybe their handle is just Casa Hodl. But yeah, Casa, great business. They consult with you on setting up inheritance plans, multi-sig, all that sort of stuff, to where you're basically prepared in negative circumstances of all sorts.
Yeah. Your sovereignty matters. And you know what? We're in a fight for our own sovereignty right now. And this is where the identity crisis of a man kind of comes into play. And I think a portion of how you can deal with that is by taking control of your finance, right? Getting it out of banks and essentially taking control of at least that sector. But honestly, there's a lot of things going on with men that I think need to happen. Now, this is insane. Bitmine, The 9.5% Series A perpetual stock began trading today under the symbol BMNP. TJ, think it's up or down?
I mean, today, tomorrow,
Yeah.
what time frame?
Today. It just launched.
Today, I mean, it's probably going to be down on the day, but I don't
It's
know.
launching at a bad time.
Yeah, but I
You
mean,
know?
long term, I think it'll probably, it should pay in the long term, but I think it's going to, just like most of these things. Oh, look at that.
It's actually trying to, let's see.
Fighting back.
I want to see this. It's actually fighting back because this is almost a leverage play on BitMine, right?
Well, definitely. Yeah, it's definitely, well, which is, you're basically what you're saying is a leverage play on Ethereum. BitMine's running the same playbook on Ethereum. That strategy is running on BTC. Obviously, they're earning and staking. Now they're talking about giving up dividends and, more or less running the same playbook. I think a lot of, they're going to look like fools before they look like geniuses. And obviously, it is not fun to be them right now. I'm sure it is not fun to answer investor questions today. If you're Michael Saylor or if you're Tom Lee, they were looking like a genius 12 months ago. Everybody loved them.
Yeah.
And everybody's going to love them again in, another 12 to 24 months.
You know how scary it is to think about how little time there is left in 2026 as well? Like, time has just been flying. Like, and maybe it's just because how hard I work or whatnot, but time is flying by. It might, Ethereum might be also painting that bottom along with Bitcoin right now. Because over the next July and August is when I do expect that Bitcoin money flow to start ticking up. I keep losing that main Bitcoin. This is the main thing that I'm watching, and Bitcoin still drives the show for general interest. And also, this is kind of crazy. So we covered STRC, and it had like those kind of impulse, sell-offs on dividend time frames. This is interesting though. There's probably going to be some questions about this. So,
oh yeah,
you know what I mean? This thing is. It was trying to bounce back because these are on weekly candles. And this weekly candle was pretty dang aggressive, about just under 9%. And it started to bounce back really quickly, but it didn't really happen. You know what I mean? This, I always get asked, and I know DZ's always covering it. As long as Bitcoin holds above 50 grand, I don't think that I need to sit here playing Chicken Little about strategy. It seems like a waste of my time. It seems that BlackRock's ownership and interest in it are probably in and of itself enough to make sure that strategy's got the right kind of friend. He's made the right kind of friends. And this is kind of a crazy theory, but I could see the US nationalizing ownership of strategy to a point as well.
Yeah, I've said that before too. When they did the IBM thing, when they, in my opinion, that's basically nationalizing IBM. Call it what you want, call it a smart, whatever. US owns equity in a company, that's nationalizing. And when they talked about strategic reserve and just like they're talking about with the AI stuff, I could absolutely see them nationalizing strategy in some way, shape, or form. Now they're going to dress it just like we were talking about earlier with CBDCs. They're going to dress it up however they have to dress it up. Yeah. But that, to me, is where the U.S. gets their stake in Bitcoin. The STRC thing is somewhat separate in the sense that, like, it is important that it recovers its peg somewhat quickly because that's the whole point. It's supposed to be stable. Yeah. And if it can't stay stable, like, what does he have to raise the yield to? Is it 12? I don't know what it's at now, 12 and a half. Does it have to go to 13, 14, 15? And, what happens if you keep raising it and it doesn't ever repeg? That's the game that they're playing. So can they get it to repeg on their own? We'll see. That's kind of MSTR and STRC are obviously inherently linked, but two different things. That being said, I almost always, again, I like self-sovereignty. Every time I go to get strategy, it's generally in times like this when Bitcoin price is down, strategy price is down, and it's just like, well, I could just buy Bitcoin right here. And so far, I've looked at strategy like a lot, and I've been very close a lot at buying the MSTR, but I always end up just saying, you know what, I'm just going to buy Bitcoin. And, maybe one day I'll use some of those more sophisticated financial vehicles. But for now, Bitcoin, my own Bitcoin, running my own DeFi pools, getting my own yield, still yields more than what BlackRock's, income earning fund's going to get.
Right.
Still earning Bitcoin, using my Bitcoin to earn more Bitcoin still works extremely well. I'm just going to keep doing it myself.
Well, and we got to keep pricing altcoins in Bitcoin too, right? Like that's something that I want to like slowly start working in, where it's, are you gaining or losing Satoshis that day of in an altcoin, right? Because that's really what it comes down to, at least for me. And I want to check out the rest of these altcoins to see how they're doing. So we got Murad is sharpening his sword. He is getting ready to dance.
I don't know about that.
It's kind of down.
It's a little, yeah. Now I will give him that. It was a good bounce, but it's still down.
It does have higher highs. Okay, it does have higher highs, and it did defend itself at this 29-cent mark. We're probably gonna see, as much as I hate seeing this or saying this, I think next year we're gonna have to hear the meme coin super cycle theory again.
Oh yeah,
that's gonna become hot again.
Meme coins. This is what you can fight meme coins. Somebody said earlier, like, you can't fight it, just adapt to it, find ways to make money with it. I feel like it's the same way with meme coins. I will never be a advocate for meme coins. I think they're very manipulated. I think most people lose more than they make, and there will always be people love to gamble, and there will always be people that hit.
Yeah,
and so we're gonna probably have to talk about it. There are ones that have hit in the past and will hit again. But for me, again, talking about using an actual investment system, it's not something that ever gets me excited. You want to take a gamble on it, fine. You want
risk adjusted. Adjust your risk.
I'm talking about throwing less than 1% of your portfolio, probably less than 0.1% of your portfolio at something. Right. But it ends up being a time suck, and I wouldn't recommend. Like the main kind of takeaway from doing this process is most of the people. And this is true across all investing and generally just discipline and money in general. The people that have patience and aren't in a hurry are the ones that make all the money.
Oh, yeah.
If
they weathered the storm.
And if you're in a rush, if you're trying to make money quick, which is what most meme coin investors are doing, that's when you risk the most. That's when you end up losing the most. That's when people get again, if you have been in this market since 2021 and you were and you weren't trying to get rich, like if you got in late 2021 and you were like, all right, by 2030 I'm gonna be a millionaire, or even 2040, or like that's even still fast to think like I'm gonna totally change my financial future in 10 years. It's extremely achievable within crypto. I've seen many people do it. I've done it myself, but many people were wanting to be rich by 12 months, next month, 2 years. And it's like, if you were patient and accumulating in 2022, you're doing great now. And then if you're patient and accumulating again, you're going to be doing great in the next few years, 27, 28, 29.
Taking the profits on the alts is always easier for me than taking it on Bitcoin too. That's another reason why I like loading up, because I know that I can take loans out against the Bitcoin if I needed to, but the altcoins are easy to just take behind the barn and shoot.
Right. When you're up big, sell the altcoins for Bitcoin. When the altcoins have moved your bit, and you said it earlier, I've been tracking my portfolio in Bitcoin for a very long time, and it makes a big difference in how you allocate, because if and watching your number go up and down on Bitcoin value, you'll see, oh, hey, like, it's interesting. It really helped me with keeping a chunk in stables. Because I was watching the Bitcoin price fall and my Bitcoin portfolio value go up, because I had a big stack of stables sitting there that that makes it way easier to hold on to my tether when I'm watching it, jack up my Bitcoin portfolio. So.
Right. Well, and also in downturns, like I learned how to trade, sit next to Frankie Candles for a couple of years. And we were both in kind of a downturn, right? Like in the market, the Bitcoin was collapsing from like 40K down to where it leveled out at 15. Learning how to make tether as Bitcoin drops, either by DeFi or by trading, and knowing that it's okay to short in general, is a really powerful way, and I made a nice little snag. I made like a 50% grab last night. The Discord's been on fire as well. I saw a lot of shorts going on, but a couple longs. Buck Slayer's got an 81% gain here on whatever Grass is. He's absolutely chaotic creature he is. We got a Filecoin short that hit 68% gains. Fetch, This is the crypto printer. He's giving out a lot of signals. We got a beat short, only 5x leverage, 306%.
Yeah. By the way, I'm
crazy.
we finally, I know we've been working on this for a while. It was harder than I originally anticipated to create, but we have built an incredible app that does automate a lot of these things. Like you can follow a strategy. And
I'm excited to show. Yeah, because
we've been testing it.
Yeah.
We might open it up to a few beta testers here soon. If
it's
you're
for the
interested,
calls that come in the middle of the night,
yeah,
right?
it's for yeah. So because a lot the quant trades Asia hours and he's momentum based trader, so sometimes they'll pile in fast at 2 a.m. or 6 a.m. and a lot of times if you trade a lot, those are really good times to trade. So if you're interested in beta testing, I'm just curious. Like this is not, if you're new, this is not for you. This is for somebody who has been trading for a while. You understand how to trade. You've got a portfolio, and you're looking to test something for us. If you're interested in that, and basically what it does is you can add more than one strategy, but right now it takes all of our quants calls and it puts the stop loss in, puts all the take profits in automatically. It all runs through Blowfin. So if you use Blowfin already and you're interested in this, just put beta just type beta in the chat, and I'll look at
it's
those.
something I definitely want to, because at night when I first started trading, I was staying up till like 3 o'clock in the morning.
Yeah.
And I had the sweats all night. I'd be freaking out. I'd wake up all bug-eyed and come in here and slam a couple of these yerba mates and just make it happen anyways. But if I can have a bot taking those calls, the quant has been very, very good in terms of his calls. They just come through in the middle of the night. So it'll be pretty exciting to be testing that out.
Real quick, I see this here from Dementia. He said, you guys are shadow banned or something. I couldn't find you on my main page, and I watch you guys the most. This is a YouTube thing for a while. If you guys could, it really helps us a lot if you hit the like button, or sometimes if you turn notifications off and back on, that helps a lot. I don't think we're shadow banned. I just think YouTube is very, very, very in this mode of serving stuff different stuff. So I don't know why that happens. Like you said, you watch us every day. I experience the same thing on my channels too. So if you guys want to see us more, okay, good. A lot of these things.
Yeah, we have a lot of people wanting to do the beta test.
All right, well, cool. So that's going to be too many for me to track. Actually, if you typed beta in there, if you are interested, send an email to office@hitnetwork.com and say trading app beta in the subject line. I'll type it in here in chat. I'll actually pin the post here, and we'll pin it in the comments.
That's the email that I emailed when I wanted to get the job
Office
5 years ago, and I predicted Ukraine stuff, and the chaos broke out right after I sent that video to you. Those are special times for me to think about.
And this is and I'm not, just because you're asking doesn't mean we're gonna put you in there, by the way. Like if you're very committed in our community, we just need a couple people to test it. It already works. I've already been testing it. This will probably be something we make part of our group in the future, where if you're in it, you'll get it automatically. But this is not necessarily something for everybody. So
well, I know we're coming up close, and I'm keeping the FOMC live on the sidelines here, but Zama, Morpho, and Stakehouse launched a confidential DeFi yield vault on Ethereum. Now, when it comes to confidential DeFi yield, thinking about the things that the banking sector wanted to take away from crypto, that being high yield and outperforming yield products being available within this Crypto Clarity Act, the idea of having confidential yield is probably a pretty strong narrative to be paying attention, because the more the government or the banking industry wants to stop something, in my opinion, the better it's going to perform in that teenager syndrome kind of reality that I have. I think that what I'm missing out of this, I feel Morpho is strong. Have you used or liked Stakehouse? Like, what are your thoughts on Stakehouse and Zama? Because I almost want to start tracking these two DeFi.
I have not used Stakehouse, no.
Yeah, I want to start tracking these things and, kind of going to DeFi long. I'm just going to look real quick. Just real quick. This is a tool that I like using to catch fish early. And just like the general thesis for lending, I think what we're seeing is a bump and run to kind of previous highs, and it's defending itself around the $40 to $50 million or $1 billion range, just in terms of general lending. Aave is defending itself for the first time in a long time, TJ. It fell to 11 billion and some change about a week or two ago. And now I'm starting to see some big inflows. It's now back over 12 billion. Morpho is just steady gain. But within this, you can kind of go through and see all the different ones that are here. And this is where, God, I think I remember loop scale. I really want to make sure that I'm paying attention to these lower ones, because I don't think that DeFi is going away. And if you go to like the top performers, it's a lot of it is DeFi and kind of DeFi, Aerodrome. Then you got WorldCoin, the AI play. You got SPX for the culture, DeFi with Uniswap, decentralized exchange with Hyperliquid, DeFi with Jupiter. Celestia, I'm not bullish on Celestia. I don't think there's much that people can do to make me bullish on Celestia.
Yeah, I'm with you on that.
Yeah, I think the modular blockchain thing is just dead. And look at the chart. I mean, this just makes me want to fight someone.
Yeah, now that would be one, like that's about as down bad as it gets. And maybe you're looking for that relief rally to catch something on, but I don't like chasing those. And yeah, I agree. The modular blockchain was hot for a while, but it's not, again, to me, layer ones in general, and this pains me because layer ones was in a lot of ways how I made a lot of my money in crypto, being early on Ethereum, being early on Solana, being early on many other ones, even Cardano, Avalanche, there's the whole list, and many of them made it up into the top 20. At this point, the main two that I still hold are Solana and Ethereum. And if you look at stable coins and stable coin usage, and you can make a case for Tron, there's some other ones out there. I'm not saying they're the only ones, but less and less interested in new ones because you're getting that network effect kicking in now where there's too much liquidity on these other chains. There's too many users and developers and apps where, because again, you're building a network, and people forget that there is a difference between an app and a network. And when the network effects really start to kick in for some of these, it becomes impossible. You can build a new social app, but you're not going to overtake Meta very easily. Like sure, ByteDance came out and they did some stuff with TikTok, but I'm not saying it's impossible to compete. I'm just saying there's definitely not space for 20 layer ones or 50 layer ones to all do as well as Ethereum and Solana.
So I've been making more shorts.
Okay.
And I've been going on TikTok lately.
Okay.
I took my kids to the park, and I have seen children.
Rates came out.
Rates are unchanged. I'm checking out the chart right now. Bitcoin pulling back on the 1 minute chart. We have it from Watcher Guru here. Federal Reserve left interest rates unchanged, remaining at 3.5 to 3.75%. Why are there so many children dancing behind dumpsters and making TikToks? Why every single time? Yes, it is a thing. And I don't know what's happening to this country. I think as parents, we need to be careful about what's going on out there. So the Federal Reserve did indeed leave rates where they are. I just had to get that off my.
Yeah.
It's something that's been bothering me. I've seen it like 4 or 5 times in the last 2 weeks.
Yeah.
And this is the first time I've ever seen it. And they're all behind dumpsters. Like choose a tree or something, or like something a little lighter than that.
This is the interesting thing. 9 of 18 FOMC participants pencil in the 2026 rate hike. So 50%.
50%.
Right down the middle. They're giving us nothing.
You know what, though? So 50% expect things to stay flat, and then 50% expect a hike, is what you're saying?
Yep.
So that's actually more dovish than what it was earlier. The 80% of the Fed governors were expecting what was it? I think it was 80% were expecting a slight hike, right? So this is actually a pretty good sign here. I'm very interested in how that guy handles this. A lot of people are on edge. Especially in the macro markets. Bitcoin taking a little bit of a tumble here. Let's go into the Bitcoin chart. So the general bump and run mark actually played out this morning from the mid 64 region, 64.5. It's given up a lot of that action so far. God, I'm starting to sweat wanting to trade while I'm doing this right now. You know what I mean? And just on the 15-minute, I'd say that the money flow downturn is starting to get eaten up. You're starting to see the downturn get eaten up. Yeah, the momentum wave is to the upside, so you probably got a little bit of leveling out to go on here. But the 4 hour, let's go look at the 4 hour money flow time frame. I like trading the Asian hours. more than anything. I like trading the Asian hours. 4 hours still showing a nice juicy green dot on the 4 hour VWAP trigger wave. Click in there and you got the money wave swoop to the upside there. The 4 hours looking bullish. Daily, we actually might have, if he winces a little bit dovish here and the Asian markets decide to run with it tonight, we could go vibe check this 67 spot again. We absolutely could, because the daily, looking at it, I mean, it had a massive drawdown when we went to 59K. And usually you get a very, very strong bounce when you get the momentum wave hitting the negative 95 metric. This is Crypto Face. Crypto Face's market cipher. If you're trading, obviously you got to get in the Discord to get the live calls and everything like that. But another piece of confluence that I've used for a couple cycles over now, and it's made me a lot of money doing so, is the market cipher. I don't even have an affiliate code for. I just like the guy. He comes on our shows every now and again, though, on the X account. Very good product. So, seeing a bump and run to the midpoint of this W pattern is something that I baseline expected when we hit this 67 resistance point. And the most bullish structure for us would be this initial knee-jerk reaction back down to the midpoint, and then a continuation on up, and go check out what 68 feels like during Asian trading hours. It's mountain. It's what are you saying, T1? It's mountain. Is that because I'm from Colorado? Did I say mountain?
I don't know.
Okay.
I wasn't. I'm fixing the title and the thumb for the press conference.
Okay.
So I was distracted.
Yeah. T1, you chaotic creature, dude. So I want to cover a few more things here. I actually want to cover a couple of different charts, because I am getting pretty feverishly bullish seeing the markets and the money flow playing out. Yeah, we're gonna pump so hard. So I think, honestly, seeing us defend ourselves around 60K is a very, very bullish sign. That was a very sharp drawdown about a week and a half ago or two on Bitcoin. So the fact that we were able to bounce like that, Fed chair about to be so dovish.
Yeah, I'm curious. What do you guys say? Where do you land on there? Before you answer, I'll put a poll in and tell us, chat, where do you think? Is he going to come out? I mean, obviously, rates unchanged. That was pretty expected. But will he be dovish or hawkish? I'm going to drop a poll, but say dovish if you think dovish, hawkish if you think hawkish.
I think that if it were me, and what I'm expecting him to do is actually highlight the oil price pullback, right? Because even with Bibi misbehaving in Lebanon,
but real quick, if you guys don't know, hawkish is bearish, dovish is bullish. Just to
good clarification.
Yeah, just to throw more animals out there. Yeah, there you go. I see you, Crypto Steve.
Sorry. Okay, Steve-O. I have the power to ban from this position. So
he's been banned before. Don't make me search for his name again.
Yeah, I would be if I were the Fed Reserve Chair, and it's my first. Kind of what is going on here? I want to pull up the Brent crude prices, but I have a gut feeling that Brent is still right around the $80 mark.
Why does it keep? Yeah, there it goes.
I don't know why it's doing that.
There you go, 78.
Oh yeah, 78. This is even better. Look at this. So if I were the Fed chair, you have decent job data coming out, and honestly, they could be taking in fake job data, and they could know it's fake, and they could just lie about it for half a year and fix it next year. That's what they did. For what was it, 2 million jobs that they faked off of all the Jerome Powell decisions. So I think the pullback in oil prices is going to be kind of a bellwether note for him on inflation has the strong potential to cool. Okay. I think that and honestly, this makes me and my Sequoia heart very happy, because I bought this truck. Remember, I bought the truck right before the damn conflict kicked off. Life was good. Gas was $3. And all of a sudden I go to work the next week and it's $5. You know what I mean? It's probably no lie. It's about $300 or $400 a week to go through that thing. But it's not about miles per gallon. It's about smiles per gallon.
That's right.
And that's right. I know what I have. I know what I hold. I'm smiling the whole way. So if I were the Fed, I'd be talking about inflation cooling, highlighting the lower oil prices. And this is going to take a little bit of time to flow through and actually hit economies in an actual way. We still are dealing with the high cost of logistical transport that was happening during this whole region, right? So prices of goods, they're not going to stabilize. And that plays into what you freaking said. Damn it.
What's that?
that they're going to need more time to get more data on how this ends up playing out.
That's what he's gonna. I think that's what he's gonna come out and say. Like,
yeah,
and he's gonna say dovish, like he thinks that things are probably gonna cool and thinks everything's heading in the right direction. The economy's looking strong, and he thinks that some of these things are temporary. I would imagine it's gonna be along these lines, and it's logical. You know, like he needs to know if oil stays below 80 and in this range, you know, then inflation will come back down on some of those core products. If we jackknife back up, then, you know, we're going to feel it.
Yeah. And the oil industry is very happy in the $80, $70 region. Like you don't want oil too cheap, right? Then the producers are missing out a little bit. But you also don't want it too expensive, because then you have a kind of a gridlock to the economy, which no one wants to see. So that's kind of my general feeling of what the Fed's going to say. And chaotically enough, I got a couple 7-day charts to go through on altcoins that have been really performing quite well. Uniswap is only $3. Uniswap's still relevant.
Yeah, Uniswap. Uniswap is the OG when it comes to DEX. It was and really the most successful, arguably the most successful airdrop of all time, depending on who you ask. You know, but I mean, a lot of people, it was the first real airdrop where people actually made good money. And they rewarded their early users.
Absolutely.
And, so yeah, Uni is, I agree, very undervalued. It's the trick is going to be who backs it, you know, and if it continues to get the institutional backing, or if players like Coinbase route around it and use their own product on base related stuff. So it's going to be, but when it comes to freedom, decentralization, and kind of the core ethos of what crypto is all about, Uniswap is right there at the core, and arguably one of the most used products in crypto. So
yeah,
they definitely got the users.
Let's hear. So we got DEX volume is still decently strong here. TVL is in the blue. We only need events. Let's add some metrics here. I want to get overall volume, and let's see here, revenue. Get that, and then volume. These are some of like the hyper nerd tools that we're going to be explaining in a more detailed fashion for you here. But for the sake of this, I just want to make sure that it's still structurally decent under the hood. The revenue is actually spiking a lot higher than it really ever has recently.
Yeah.
You see that?
And they've resolved that as far as I remember, they've resolved that the uni holders are, you know, are participating in revenue and all that sort of stuff. Sometimes there was a divide on, the token holder versus the entity and all that sort of stuff. And I think they've resolved all that, much like Aave did.
That's a pretty good looking metric right here.
Look at the pretty beaten down chart. So
yeah, because the TVL, I mean, honestly, the TVL just basically went down to where its original pump 2 moment was. So that's actually good looking out. Shout out to you, Steve. I love Steve.
Yeah, I do too.
I ban him out of love in my heart. Yeah. There's a guy, I thought that guy in Vegas said his name was Steve-O.
And
he was wearing some weed hat, and he was like all lit up and ridiculous. And I was like,
this is wrong Steve-O.
Yeah. I was like, you're the wrong Steve-O. And so I got on, and it was the wrong Steve-O. I don't know how that's the first.
Yeah, Steve-O impersonators out there.
Yeah, he has impersonators, but let's go to the other winners here. So obviously Hyperliquid's a nice juicy play. Hyperliquid, at this point, you're basically looking for reasonable entries about $40 to $50. You know, maybe it
that you may or may not ever get.
You may never get it. You may never get it.
Such a good project.
Good news, I can leverage trade it.
There you go.
Same thing with SpaceX. I can leverage trade SpaceX on 2bit. Right. So, I can make money off of all of these things. And that's the power of insanity. Right. You can, if you miss out on a project, then you can go leverage it one way or another. Just use stop.
Yeah.
I like Hyperliquid though. If I were a betting man, which I am, I think it's going to definitely go vibe check at least this original high in September 2025 at around $50. It's running real hard right now, but what goes up must come down. And I think we still got some chop in the markets here. So I want to go look at the other winners here. I am like a shopping fiend right now. In a week or a month, you're not going to be able to stand me because I'm going to come into your office every day with the next altcoin. Yeah. And I'm going to eat up your time. And
we'll plug it in the system and see if it makes sense.
Yeah. All right. So here's a question. Athena seemed kind of dead chart wise. Arthur Hayes, he came and then he went, right? And the chart doesn't feel so great. Is Athena dead? This kind of looks like a dead project to me.
I'd have to look at it, but it was a very VC backed project, and this chart looks like a lot of those VC backed projects. They had a lot of the right relationships. I'd have to go look at. I don't remember the tokenomics off the top of my head.
The tokenomics are terrible. Let's look at it. So price, and then market cap. Flash view.
Yeah.
So the market cap looks bullish.
Yeah.
You're looking good, but price is showing you that this thing is very, very sick from inflation.
Right. And the question is that like 80% of the way over, or is it
find out. Let's go
40
look.
or 50% of the way over? And we'd have to dig into that.
Circulating 9.2 total. Wow, it's still got halfway to go.
Oh yeah.
Yeah, we're cooked.
I would not touch that one.
Yeah, we're cooked on that one. It's dead, Jim. Shout out to you, Pops. Let's see here. Other ones, Tau making me happy. Tau has been decent. It's at 250 right now. I like 200. I prefer 150. I got one shot at it at 160 recently on that nasty drawdown about here. But Tau, this is kind of like an aerodrome situation.
Well, I like Tau for the same reasons I like Coinbase, and I'm talking about X402 payments and agentic payments and all those sort of things. That's what I love about Tau. Tau has subnets. It makes sense in the agentic world. So somebody even asked in the Discord today, what are the like AI plays, or I think they were asking outside of Tau, but my AI plays are basically near Tau, kind of on the larger cap side, and then VVV and what's the other one? I listed 4 earlier. Near Tau, VVV, virtuals. I thought I had one more, but maybe those were the.
The sector I know I'm going to bug you about and drive you crazy about is the subnets. The subnets are already pretty exciting. They're very choppy, right? But Gito,
but I don't ever get drawn into those. Even like I have an equity position in an AI company, and I own the parent that has positions in about 10 other startups. And it's just like I always gravitate towards the parent, because I don't want to bet on the one application. So I'm going to own Tau, just like Ethereum. Like I owned a lot of Ethereum before I started buying a lot of dApps, and I'm very glad I did. And same with Solana. I owned a lot of Solana before I went in there and bought. I mean, I think I do have some Solana like DEX plays like Jupiter and some of those, but and it's going to be similar with Tau. Tau is low enough down the market cap size for me to where that is enough risk. But there's a lot of money to be made in the subnets, like you're saying. So if somebody that's hungrier and more aggressive and has a higher risk tolerance, that is where you can make a lot of money, but you've got more risk.
Oh, I think even like this. Like if I take my kids out to eat, it's $150. So I don't, want to expose my portfolio to any more than like a couple grand at most on these high risk.
Sure.
At all, because then you're in a situation where the losses hurt a lot less. Check in and make sure that this Powell, or God, I keep calling him Powell. It's Kevin Warsh. Kevin Warsh is still waiting for him to come up on the air. Now we have Sui. A lot of people have been looking at Sui. I do like Akash. I'm going to go check out Akash. I haven't had a chance to really dig into Akash. We've been covering a lot of different stuff. So it's AKT, I believe, or is it AK? What is the ticker for that thing? AKT in crypto. Let's go to what it's looking like right now. So, because it was beat down to all get out. First, I want to do like a flash view of that same kind of market cap to price, just to see like how sick from inflation this thing is. Because if it hits like a critical mass in terms of being inflated, I don't think that there's much coming back for a lot of these tokens. Jesus.
Did we miss a super chat earlier? We did ask for somebody. I forgot. Somebody did ask this earlier in the show, and you were on something, and we didn't come back to a price projection for Morpho. Have you done that? Have you done that lately, or maybe that's an upload?
That's an upload. In general, I think that it's absolutely on path to hit about a $20 billion TVL, like conservatively. And The governance setup of it's very solid, so you're going to see price be able to follow. And then you have the privacy angle, the private yield angle that they're rolling out now, and the massive amount of Coinbase shilling that it's going to do. Like the amount of talking that I can do about Morpho is not going to move the price.
Yeah.
But if Coinbase builds it into their app, that is where you see the actual price move. I'm going to do an upload on that.
There you go. Do a deep dive.
I'm gonna do an upload on that. I'm going to see Akash here. This is an AI play. So total supply 294 max. So it's still got some supply to come out. It's about 300 million tokens are out right now. Total is going to be 388. So it's almost over the hump as far as the token inflation goes. It is setting a slightly higher low here. It is setting a slightly higher low. Looking pretty bouncy. You're probably going to run into some skittish folks right around $1 for sure. Akash, let's say we get some more chop, some more wobbliness in the market. I would like to snag some of it in this zone at the $0.50 zone, just as a high risk, high reward play. But I still actually do like Akash. What I like is crypto projects that stay focused, that have a focused use case.
Yeah.
And that are trying to fix problems, not just be this, vacuum of liquidity that pumps up and then dumps and then everyone complains about it. That's not sustainable.
Yeah.
It's not sustainable.
I agree. I see this question here. Isn't ICP what ETH was supposed to be? Maybe that's what they say. That's probably what they claim. But again, kind of to that same point, I'm not generally attracted to a project that relies on another project for their marketing, if that makes sense. Like, oh, we're better than them. It's like, okay, just be who you are. Don't necessarily, like, if you have to say another company's name in your pitch, that's not good. And you arguably they're not, because they haven't achieved anything close to what Ethereum has. And they say they're the better version of that, but that hasn't necessarily proved out. So like you said, buy it. You made a lot of money with it. You sold it. It's definitely a fast pumper. But again, network effects, layer ones, that's a hard space to break into. Plenty of people have called themselves Ethereum killers over the years.
Oh yeah.
Nobody, maybe Tron got close. Solana's up there, but no.
It is Coinbase.
Yeah, exactly.
Coinbase and BJ was right. Like BJ's like, Ethereum's going to get captured by Coinbase. I was like, no, it's not. And then I sat for like a week obsessing over the theory, and then Base Network, Morpho, Aerodrome, all of it. ICP is a painful one to think about because I made a lot of money with this one. And it was more of a revenge trade because I was one of the idiots that bought a couple tokens when it was like $200. $200 a token. So I bought a couple tokens and then I took my revenge when it was at $3. Generally, this thing looks highly manipulated.
Yeah, it is highly manipulated.
Yeah, so like it went through like its birth of extreme manipulation and Alameda research and all that stuff. And then it's turned in like this volume node right here looks like an escape pump for insiders. When you're really, if I'm shooting straight with you here, maybe, if you're crazy enough to buy this thing here, if I'm crazy enough rather, then I'd be looking for just like, that's 150% just to the downward trend line right there. So I'm not trying to see this thing break back up into the $80, $100 range. This is an extraction vehicle, it looks like. Seems like it's mechanically being defended so it doesn't go to zero right in the range that it's at. But yeah, like ICP, it'll have weeks where it just runs completely counterintuitive to the rest of the market. And you have to be a little bit insane to be buying ICP, which I am, which is why I made money off. Right. So, that being said, just be careful. That's all. It's all about risk adjusted.
I'll just say this. I'm not that crazy. I'm not going near that with.
I understand that.
Yeah. Okay. Now I get it. You could, like I said, and just because I'm not touching something doesn't mean you can't make money. But as far as like investing, that ain't it in crypto for me.
No. If you hold that thing cycle over cycle, your wife's going to leave you. Your wife will leave you. If you hold ICP.
Many relationships ruined over holding ICP.
And what are we doing this for? It's for the kids.
Yeah.
The legacy, the wife.
Insane crypto posse, as they say.
Yeah. Insane crypto posse. Yeah, it's pretty funny seeing Aerodrome being the biggest winner on the week.
I'm smiling about it.
I'd imagine you're smiling pretty good.
Yeah.
You know, and this also feels really good knowing that our barometer has been right for a really long time. And it comes with cycle over cycle. You know, being able to navigate this crypto up and down swing is not easy. That's why I look a little crazy sometimes, because I'm always trying to do the best by the community here. But Venice token, again, you should be smiling again.
A lot of my look at Aave's up there, Venice is
Yes.
up there. A lot of the stuff that I hold,
Mhm.
Solana's up there, Near is up there. What else? Scroll up. There's probably
Yeah.
more even.
Tensor,
Tau is up there.
Layer
Jupiter's
Zero
up there.
This one's interesting. Layer Zero.
Yeah.
It kind of lost the plot a little bit ago, but it's putting up a little bit of a fight here in this zone. You know, I don't know about Layer Zero. I will have to. I'm going to dive into Layer Zero more, because if it's not dead and if it's still building and has a chance, this thing could make me a lot of money. You know, looking at charts like this is totally counterintuitive to what you think would be a good thing to buy. But honestly, you know, I'm a risky biscuit. Stellar, doing well. Aster's doing really good. DZ was real happy with his Aster stuff.
Yeah.
Yeah, he was messing around on Aster. I was talking to him this morning. Say it ain't so. I don't think so, Say. I don't think so. Now, Say and Sui, if I were to have to choose between, because I saw some people asking about Sui. Sui has more of a potential it factor than Say, I would say.
Yeah.
And generally, like, Sui under $1 is a good risk to reward ratio. The thing that you have to keep in mind about Sui, and I will take this as actually a good thing, is that within their tokenomics, I actually had agents gut the smart contract. The circulating supply can be changed depending on the network decision, right? And that's the case for a lot of different tokens, but they stuck to their plan. And right now, there's only 4 billion tokens out and 10 billion total to come out over the next few years here. A very violent move to the downside. You know, Sui has actually got a bell of the ball type capability. We saw it last cycle. You know, it just came out of nowhere, started pumping from this low, you know, whatever it was, 50 cents, up to $5.50, 1,000% gain essentially, while everything else kind of just petered along. So,
well, the biggest thing that would keep me, you know, I'm kind of with you there. If I'm choosing between Sui and Say, it's Sui all day long. The biggest thing that's interesting to me about Sui is their alignment with Circle and USDC.
Yeah.
And they're kind of joined at the hip in a lot of different ways. So that's big money. That's institutional money. That's people that are entrenched in the old system and the new system. So that bodes well for Sui long term. You know, maybe it can come up and compete with Solana. Definitely seemed to win in a lot of ways the Sui versus Aptos battle. A lot of people liked, you know, it was written in Move and all that sort of stuff. But at the end of the day, this is still one of these outside competitors. You know, to me, they're nowhere close to the same ballpark as Ethereum and Solana when it comes to network.
Yeah.
And
they did have to bring up the Solana killer narrative.
Of course, that's what I'm saying. Yeah, and it doesn't. They're not dominant now. Like, again, that doesn't mean they can't recover. And like you said, I could see this, you know, aggressively recovering in a bull market. That doesn't necessarily mean it's going to win in the end, but you know, again, I'm layer ones that I have all my kind of focus on right now is Ethereum and Solana, and they're both winning in their respective domains.
You're more degenerate than me though, because I have Bitcoin and Tether. You're the one with Ethereum here in this situation. So, but I'm talking about like what I'm like. Every time I see that Bitcoin money flow crab, that's when I started like unwinding Tether really hard into altcoins. And I loved it. I've loved this for a couple cycles. So my plan's basically the same. Unless proven otherwise, the plan remains the same. So
how are we looking? Is he looking like he's about to come out?
No, I'm still waiting for him. Let's actually pull this up here. So I got, we're waiting on him. It says it's going live at 2:30 p.m. Eastern Standard Time. So about a minute from now. So I'll make sure to unmute this when he does actually go live.
Just unmute it now, and then we'll hear it, right?
That's true.
Yeah,
that's true.
And you don't have to worry about paying attention. Oh, it does unmute.
Here, I'll
Never
mute
mind.
I do like shopping. I do like crypto shopping. I'm having a lot of fun actually doing this because, you know, we built the basement in hell.
Mhm.
We built the basement out of hell. You know, like
That's true. I'm curious to hear from you guys. What coins are you scooping right now, or are you looking at? Do you think are good buys at these levels? Anything you guys want us to look at? I see somebody say Plume. Again, this is what's interesting. There's big money to be made at the bottom of these when you're going for beta plays, but a lot of times I'm just attracted to, if you're looking at RWAs, XLM is doing extremely well and continues to do extremely well. And I don't, and that has upside to me already. I don't need to go all the way down to the level of the Plumes and some of those other ones. Now, Plume, again, can compete. I'm not saying it's a negative project. I'm just saying I go for the big ones first.
Bless you.
Before digging in Zcash, again, privacy coins, not like necessary, good for society, always have a place. I'm rooting for them.
Go, TJ.
Not ways to make money or not investing in my. Here we go.
Good day.
Show. Good day.
It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people.
Seems nervous.
But the recent past may not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something: a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Oh. I was hoping to say attention to this matter.
Hi, Chairman Howard Schneider. Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall and hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter.
Move it up to 4.
Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
She wants to change it, but keep it the same. That's insightful.
Thank you so much. Colby Swift from the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
She's giving him the sauce.
Quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years, inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and, forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market. But broadly, I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
Methodological.
You said you don't like
bullish.
forward guidance. You dropped it from the statement this time, but with the dot plot, 9 members suggested that they want a rate increase by the end of the year, and the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. and they didn't feel bound by them 6 weeks from now or 6 days from now, in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability. And there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
The comparing productivity to employment.
Hi, Chris Rugaber,
is going to be
Associated
weird.
Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did. So let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say, I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do, because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time.
Acknowledging
I'm
faults.
really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Okay, Kevin. Admitting a little bit of mistakes in the past.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions, with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do, and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Not looking good for rate cut currently. There's still a chance, though.
Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement at me than improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up
Family
on your
fights.
markets.
Family
If you
feud.
look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in
I'm gonna
such a
short.
good place. This is
Short
why
it.
we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last
I'll probably
30
die.
or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job. So I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first order consequences to what we're doing. But we do have a really important job there. And it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job. That's our commitment. That's our capability. And we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the president since you're swearing in?
So on the president, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast. So I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities.
He's pretty
The
good.
way I think about it
I
is
like
this
him.
central bank needs to
I got a lot
have
of thoughts on what
a
he's doing.
wide
Yeah.
lens,
Wait.
but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens. And my meetings with Secretary Besson to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve Leaksman, CNBC. Mr. Chair, thank you. Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
Kevin O'Leary?
The committee had a discussion of
A lot heavier,
productivity
older
today.
version.
AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy? Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
That Asian fellow made me 30% on that short.
Nice.
Thank you, Nick.
In and
Timmermans
out.
with the Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Ooh.
I like it.
Whoa. Okay.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this, we come up with recommendations, which Fed staff have already begun to develop about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay. Thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the inspector general, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the inspector general, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. And I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Slap a task force on it, baby. Oh, we got a task force for grocery shopping. He's already a billionaire.
Task force for the task force.
Yeah.
So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what would the expectations for inflation being higher and also potentially growth being slower?
So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then. And I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay. But I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one. And by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Oh, the chat's asking about, are we going to get a McRib or not?
Yeah.
Where we're at.
The ultimate indicator.
Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs, and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation the last 5 years, are in the rear view mirror. And that credibility will have dividends across what we do. And the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better. But we're going to put some points on the board.
And Mr. Chairman, strong labor data in recent months, how would you sum up the labor market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah. So the committee. If I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Job market's doing great.
Life is good.
Life is good. It's behind us. Inflation's behind us. I wish they would make eggs more expensive. That sucks.
Real quick, I want to hear before we, because I've got some thoughts. I'm sure you've got some thoughts on it. But audience, tell us, what do you think? You like him? You don't like him? Better or worse than Powell? Just say right now. You like him better than Powell? You like him worse than better or worse? Put it in the chat. I just want to see overall what the take is on him.
He's more of a showman than Powell was.
Yeah,
and he uses the hand signals way better.
I think he's more common. I like him better, to be honest. I'm not. I actually thought I didn't dislike Powell. This is nothing against Powell. I just think. Like he's a little bit more fiery. He's got a little bit more, again, like just like tongue in cheek saying I got a task force for that afterwards, which I do think that whole thing was set up to, it was much more political. You know, he that was all set up for CYA. He's basically saying we're getting all new information from all new people, and I'm relying on these people to give me the information. And so if something bad happens, it's going to be because I'm relying on them, not making the own decision myself. So he's
True.
very smart politically, which is what they do in that world a lot. But what's interesting, and part of where I think the confidence comes from, is he's in a little bit of a different socioeconomic circle.
Yeah.
For those of you that don't know, he, and I saw somebody mention it at the top of the show, or top of his speech. He's married into the Estee Lauder family, which is a totally different. What Powell represented was, in his whole career, was traditional institutional banking. And if you guys are looking at the signal underneath the noise right now, if you're paying attention to what's going on, the traditional institutional banking is getting upended like it never has before. For the first time ever, you've got stable coins like Circle and Tether threatening, the stranglehold that the central banks have had forever. And a lot of I think the war that's going on right now and all sorts of different stuff is all tied to this changing of the guard and the store of value. You keyed in on Basant saying a new Bretton Woods type of moment is coming. And when you look at who's who, it's perfectly represented, even just the Powell family connections to Kevin Warsh. So just Warsh, marriage dynasty, married to Jane Lauder, whose family controls global cosmetic giants, Estee Lauder companies. Somebody else mentioned, global banks that were tied back to Israel, that sort of stuff. Ronald Lauder, prominent businessman and longtime influential donor to Trump. So this is the type of, when you give to somebody for years and years and years, this is the type of political favor you can curry at some point. Hey, my son-in-law, let's put him in charge of one of the most powerful banks in the world.
No big deal. Hook him up,
that's kind of his background. While Powell, his whole background was traditional finance. He's not a small fry by any stretch of the imagination. Very successful, very wealthy, very powerful in his own right. But you're talking about two different seats of power coming from two different angles. And I do think this is a lot of chess going on. This, in my opinion, bodes well for Bitcoin and not well for the banks. You're seeing that battled out with the Clarity Act. You're seeing this with a lot of this Fed stuff. You're seeing it with inflation. If they abandon the dollar, all of those sorts of, if they just keep inflating the dollar over time, that's good for Bitcoin, bad for most traditional banks. So interesting. You guys keep seeing them in. Some people saying boring, some people saying worse, some people saying better. I think it's going to make for better things. But what's your take on it?
I thought he did a good job delivering the message, and he did call out a lot of the fallacies of how they take in data and how they're making decisions off of revised data. He even brought up the revisions, because there's millions of jobs that they basically lied about. That Jerome Powell made major decisions off of. And they never really reversed those decisions either. So, and I did like the volatility on Bitcoin, obviously. When he started to when the peak of it came away, I put in a little short, scurried in and out of a trade for 30% just about. So I like seeing the volatility come to the charts. But in general, I think that making a new way of taking in data leaves a lot of opportunity for live data and things that are being developed to actually find a big, respectable spot in the Federal Reserve. Like, remember Trueflation came out with that product all that time ago? Things like that, like live data. He made it, companies are using live data to make live decisions. Why shouldn't we be able to do that?
Poly Market's more accurate at predicting this stuff than they are themselves. So I we'll see. As his first press conference, I think it was, like I said, a lot of setup, a lot of, I'm putting the team in place. I'm going to rely on the team. I'm going to make the phone calls. I'm going to do all the stuff. I'm going to make the task force for the task force for the task force. We'll have to see how that works and see what his actions are. He hasn't really revealed all that much yet. But overall, I think it's going to be more entertaining. We'll see. We'll see.
He's got some spunk, and he at times I have a feeling he's going to reach this point where he gets really pissed off with all of us, and that's when we're going to see the angry drunk uncle type angle come out of him. I think that he's got it in him. I could tell under there. No offense, friend of the show, but I could tell that he's got some spunk. So glad we covered it. Glad to get my greasy fingers back on the trading sticks for that at the end of that. So I'll be trading the Asian hours tonight. And we got that video. You kind of front ran the video
Yeah.
of the reality of what the crash actually means.
Crash up
Right?
is coming.
There's a lot of questions. So appreciate you for joining us on this show. We coming back to you tomorrow morning, obviously covering everything in crypto and the macro markets. Do our best to keep you guys up to date with everything going on in a very concise manner. Treat your loved ones well, and I will see you on the next episode. Take care.
We just wanted to take a quick second to shout out our sponsor, Arculus. They are a cold storage hardware wallet, helps you secure all of your digital assets for the future. Just tap this thing to the back of your phone and boom, you're in. We wouldn't be able to do this without them, but also wouldn't be able to do this without you guys, the Disco fam. You've supported us a lot over the years. If you want to support the channel now, just use the code DC20. It gets you 20% off this card. It's the #1 way you can support this channel going forward. Thank you for your support. We'll see you at the top.